the future of media. We have a cluster of neat stories here that we're going to kick off with a really small kind of seed round, Natasha, I think, for the Juggernaut. So please tell us what's going on there.
Yeah, so the Juggernaut is a company that's kind of been in the works in some form since about 2017. It was a free newsletter started by Snigdha Sir that was focused on South Asian news and analysis. And then she saw an opportunity for maybe a paid audience, went to YC. Instead of taking the paid newsletter route, she created a full media publication and brand. Woo! Yeah, which I was super excited to see for so many reasons. Obviously, it's a South Asian, but also refreshing to see not everyone taking the paid newsletter approach. She kind of chalked that up to thinking that with this kind of news and analysis, it works better to have it as like a network that you can kind of click through and get a broader feel for it instead of living in your inbox once a week, kind of being a everyday tab. And so they raised a 2 million seed round led by Precursor. And yeah, I mean, all good news there. I was very excited to hear about them finally kind of raising their first official chunk of cash.
Yeah, so I read your piece about this, and I learned a lot of stuff, including that the original free newsletter was called Ink Mango, which is actually a really great name. I really liked that. I think the Juggernaut's better, but like it's weird to go from a good name to a great name. Usually people go backwards. And then also it's pretty cheap. It's like $4 a month for an annual, or $10 a month if you pay monthly, or you can buy a lifetime for like $2.50, which I dig. Other people are doing this, like what's that neoconservative thing over on Substack?
Dispatch.
The Dispatch with Jonah. Yeah. They're also doing lifetime memberships. So I think we're seeing innovation on the price points. And I love that this is not a paid newsletter. I love that it's a website, it's a blog. It has content on it. You can go there. Just because I'm an old school blog fan, that makes me just very, very happy.
Well, I think what's interesting here is, there's millions and millions of Indian Americans, Pakistani Americans, Bangladeshi Americans. And, traditional media hasn't really served those markets all that well. Many of them are scattered across different regions, and none of the local newspapers cover those in depth. So, for instance, the Juggernaut has covered a lot of Indian and Pakistani restaurants in the Bay Area, not just talking about the fact that the restaurants exist, but the stories of the entrepreneurs behind those restaurants. And to me, like, there's a great community building function where, similar to what you just mentioned with the Dispatch and other niche publications, but connecting folks who may not be geographically centered, particularly today with coronavirus, but who have this sort of identity connection across the country, or maybe around the world, and being able to create both a media and a community around a publication.
I'll add too, I asked Snigdha, I said, let's say the Washington Post or New York Times all of a sudden realizes that you're really onto something and starts dedicating their journalists to the beat more often. Because let's say, like, I'll make a not so perfect parallel of like Taylor Lorenz kind of taking on this influencer beat. Maybe an influencer publication wouldn't do as well because it's already a really strong journalist covering it, everything on it, or the big stories on it. And Snigdha said that like a part of her is worried, but then she always goes to like the LinkedIn pages of the New York Times and the Washington Post and realizes that there aren't many resources and there's really nowhere near the focus that she has. I thought that was a great response because I think as a paranoid journalist too, I'm always worried, but...
Yeah, Danny and I talked about this recently, actually. We've been talking about niche publications versus more generalist publications. And as we think about, our own publication and how it fits into the world, we think about the broader landscape. And I'm actually kind of bullish on the niche side, frankly. I think that it's great that the Times has Taylor. We all read her stuff. She's fine. It's good. But I think a publication that had multiple people driven on one particular thing can really get the most in-depth sourcing. And we've seen this across, for example, the fintech space, where there's a number of niche publications that are all quite good. And so you can also go read those. Now, TC is not going to stop covering fintech. We're going to cover all the startup world that we can, but there is power to niching down to a specific sub-beat, if you will, and then kicking the hell out of it.
I was just going to bring in one last note on that point, Alex, of like Snigdha really making a clear stance that they're not planning to translate certain words, not planning to write for, as she describes, kind of the white gaze. And I think that was a really smart decision to keep it. People are tired of things being dumbed down. They want smart, thoughtful analytics, and they'll pay for that. And so that was also refreshing to me that we're not going to see kind of like a watered down chai recipe on the Juggernaut anytime soon. Subtweets only.
We need an Uncle Roger for South Asia.
I don't get that reference, but I want to talk about the exit market for these things, because when I hear about a VC putting money into a media company, politely my alarm bells go off. I'm like, oh no, what's going to happen to this? Is it going to be the next Vice that grows and then gets a big valuation and then kind of crumbles? Well, there's a couple of things that have come out recently in the media space that show that there could be appetite for exits in the media world, including the possible exit of Morning Brew to Business Insider. Danny, and I know that Morning Brew is written in your tone, and it's written for you as part of the audience. So tell me why this deal could make some sense.
You're talking to the person who literally does not drink a morning brew and drinks tea, which is a far superior beverage to coffee, I might add. But morning brew, I mean, a couple of years ago, a group of folks out of University of Michigan basically built out a daily newsletter focused on stocks, and it was highly voiced. It had an opinion. It was direct, and it was sort of this smart brevity. And we're going to get to Axios next. I think the magic here is actually they timed the market extraordinarily well, not only with the rise of email newsletters, but also with Robinhood. All of a sudden, a couple of years ago, we had actually the nadir of all time in terms of retail stock holdings. Almost no one actually owned individual stocks. Now people are buying and selling and trading all day long on Robinhood. And so Morning Brew sort of captured, I think, that momentum. And so we heard from Wall Street Journal some rumors that the company is going to potentially be bought out a controlling stake, and that's vague, of more than 75 million, including performance incentives. And so what I think is interesting is, one, it's bootstrapped. It did raise $1 million of friends and family and fools, the triple F round, but it never raised venture capital funding. So to your point with the Juggernaut, I do think the VCs can shape the incentives for a lot of the growth in many media companies. But they doubled down on what they did best. They built out additional newsletters around other topics like technology and other kind of business adjacent categories. And I think it's like similar to The Athletic. When you're focused, you have voice, you have really smart people, and you have a very niche identified audience. There's a lot of magic there.
And a lot of money. I mean, I know some people who have looked into buying ads on Morning Brew or sponsoring the newsletter, whatever that kind of works out to be. And it's not cheap. It's not cheap. Very engaged audience.
I want numbers.
I wish I remembered them, but they were high in a good way. Like, I love to see a media company make money selfishly, because this is what I get paid to do. I don't have any other skills by this point. This is the last thing that I'm able to do for money. So I hope there's jobs out there for me to do it. So I'm hyped. But the point is, like, it's not like BI is buying a vanity asset that has 48 cents in revenue and loses a bunch of money. It's buying a company that has mostly self-funded, that does generate material incomes. And so the dollar amount, this $75 million valuation, possibly with incentives added on, makes some sense. And that does provide a little bit of framing for the Juggernaut about where it could land. I don't know. That wouldn't exit to BI, but that, there's other, it just puts stuff in the market that allow for comps, which help VCs. And that's my take.
And I think the key piece here is BI itself, which we haven't talked a lot about on the show, on an M&A and sort of corporate front, but it has a very ambitious strategy. I mean, it wants to double and triple its newsroom. It wants to triple its revenues over the next couple of years. It's well financed. A bunch of the German publishers, if I recall, own it. Axel Springer. So to me, like, there's a huge opportunity there where if you double down on your niche, double down on what you do best. I think BI really wants to be I don't think they're Gen Z, but certainly the millennial Gen X of the Wall Street Journal. And the Wall Street Journal still struggles with this age issue. From what I hear, it's still in the 60s in terms of average age of readers. So, there is really an opportunity for the business economic focused reader to capture that at the earlier ages.
Totally. I think you're spot on with the ambitious strategy, Danny. I don't remember off the top of my head, but they've made a couple really high profile hires over the past couple of weeks of editors from huge publications, which people on Twitter are kind of joking about, like, how did you do this? And I don't think it would be crazy if BI bought a data company that tracks startup funding and financings down the road. Like, I think that we see, like,
is that like a rumor mongering? Is that like an act? Is that a random?
Are you willing that
like
into existence?
I'm very much seeing like a network of BI form, and BI like does need to do this.
BI is hiring aggressively. They are looking to staff up. They're very serious about this. They have a strategy around driving subscriptions to their product, building out individual newsrooms, and they're legit about it. BI has a reputation from 10 years ago for being kind of shitty about like clickbait and like loud headlines and stuff. They've grown up a lot, and I don't think, just as TC shouldn't be judged by its 2008 form, I don't think when it was like one dude shouting at the internet, I don't think that BI should be held to everything that it used to do, just as BuzzFeed News, super serious, versus 2010 BuzzFeed.com, not comparable. So I think they're ambitious, and again, excited by this as a reporter. But Danny, let's move on to Axios and another success story in the VC-backed media world.
Axios is a success story. So Axios started a couple of years ago by Jim Vandehey and some of the Politico alums, Mike Allen, who's famous for his playbook. And what Axios has really pioneered is the idea of free newsletters. This is not exactly brand new in the sense of the internet, but what they've really managed to figure out is like exactly what to write in a newsletter, exactly the audiences to target, and exactly how to connect the right advertisers to that audience. And so they've actually built upon the massive growth in corporate social responsibility budgets, which is a huge part of the revenue. And so what we learned, again, from a Wall Street Journal scoop this week, is that the company's targeting a $58 million revenue year in 2020. That's through the pandemic. And it's actually projected to continue to grow 30% next year. And 50% of its revenue comes from newsletter subscriptions, newsletter sponsorships, to be clear.
There you go.
And so to me, like, there was a lot of guessing of like, hey, they're just going to copy the Politico playbook, and that's a joke. They're going to try to double down on what Politico did in terms of DC coverage and this fast scooping model. And as much as we make fun of smart brevity, and I make fun of it all the time, people love smart brevity. They love the butts and deeper dive. And a
Thought
deeper
bubble.
dive is a sentence. Thought bubble.
BFD.
Yeah, exactly. We should do an entire podcast of smart brevity. But to me, like, if
it would be
you're
a
starting
tweet,
to,
Danny.
media gets all these knocks. I think the message here is that you're looking at the Juggernaut. It's getting interesting fundraising in a compelling audience. You have Morning Brew, which has really proved out kind of an individual newsletter, and that there's value to another publication. And then Axios is showing that you can make a lot of money in this category. So to me, there's actually a really positive media story, and that's not something we've seen for a long time.
I completely agree. And I think that something that gets lost in kind of like the glam of paid newsletters is that these free newsletters are democratizing this information in ways that all the paywalls will not at a certain point. Like, I also am pro journalists making a lot of money. And I'm happy to see that you can do that while also reaching the most people. The paywall dynamic, I think, like, consistently is something that we think about, we talk about within TC and EC on like, what's a story you paywall, or what's a story that's kind of public good and we should not be charging people to read.
Yeah, it's tough. I mean, just to be kind of candid about TC's evolution to being also a publication with a paid element, is we're still figuring out where to draw that line, and not all the decisions you make are popular with people both inside and outside. It is a balance to strike. It is not easy, nor is it trivial.